Hello and welcome to another episode of Bidishanomics. I am Sabika Syed and with us Dr. Bidisha Bhattacharya, our consulting editor for economics, who takes your questions, dear members, on economy, India's position, how global affairs are impacting us financially. The first question is by Nikun Sanghai, our very loyal viewer. They're asking SK Hynix was able to secure major US funds and Samsung just revealed a 19-fold increase in profits. The numbers just sound too good to be sustainable. Do you think the amount of capex in US is sustainable? If not, what are the ramifications for countries such as Taiwan and South Korea, which have heavy dependence of a select few companies?
Excellent question, Nikunj. First, let's kind of unwrap as to what exactly happened. So, SK Hynix, the South Korean company, it basically makes memory chips, and
Okay.
this week it listed its shares in America for the very first time. And it did this through something called ADR, which is American Depository Receipt.
Okay.
Basically, that is a certificate using which anybody from in America can purchase or buy shares of a foreign company without needing or without the help of a Korean broker. So here this listing kind of brought in, and I would like to mention the data point here, which is $26.5 billion. Now that's a little less than the $29 billion that this company had actually hoped for.
Okay.
But the chip stocks lately have been a little shaky, as a result of which, but still this $26.5 billion is a very, very big number, that even at its lower number, it is still the second biggest stock sale ever, just after SpaceX, and this is also its biggest ever US listing by a foreign company, even bigger than Alibaba.
Okay.
Right. So now this money has been claimed that this is not going into anybody's account. SK Hynix has said that it will be using this money to build new chip factories and new factories to research and enhance in this particular area, and also purchasing new machines back in Korea. Now there is also another data report here, which is and it's important to mention specifically here that SK Hynix had earlier gotten about $458 million from American government's CHIPS Act.
Okay.
That was basically a law or an initiative that was made to bring chip making back into America, basically. But that was a government aided or government help. This is something which is at a much larger scale, because private investors have entered into the picture because they also want their fair share of the AI boom. Now coming to Samsung. Now Samsung, as very rightly Nikunj stated, Samsung just told its regulators that its profits from its main business, even before paying interest and tax, will be around 89.4 trillion Korean won.
Okay.
Now won is the WON, it's the currency of Korea, for months of April, May and June. Now that is a 19% jump from what they had earned in the months of April, May and June in the previous year. This is Samsung's third record-breaking quarter in a row, and there's only one particular reason for it. There is a particular chip which is called HBM, high bandwidth memory. Now this chip sits right next to the AI processors, and right now nobody in this market can make enough of it.
Okay.
Right? So now what's happening is here, it's important to deviate a little bit and say that even on that same day when Samsung had announced this, even with this record profit, Samsung's stock had actually fallen by almost 7% on the same day. Why? In earlier episodes we have spoken about this expectations factor, because as I stated that this was Samsung's third record breaking quarter in a row, investors are already factored in, and stock market kind of reacts better with surprises than with gains that they already know are coming from a particular company. Now the next part of your question, so that is all of this sustainable? Let's look at both sides. First, the good side. Now the shortage of AI memory chips is real, but the good side is this is more of a supply problem, because everybody's buying these AI chips. There is demand already there, but there is a supply problem, as a result of which the prices have been increasing by 40-50% for that matter. However, unlike some of the past booms, say for instance the dot-com bubble burst, if we go back to the early 2000s, that was when investors were putting money in companies or purchasing stocks of companies that had not even made any real profit or real earnings. That's not the case this time. All these companies are making proper profits and real profits, and those are growing over time. Now comes the worrying case. Now, these big American tech companies like Amazon, Microsoft, Google, Meta, they have been investing heavily. They are being called the hyperscalers. Because their data centers are so huge. And these companies are expected to spend around $700 billion this year on AI equipment and also buildings. That's a huge amount. However, one study particularly claims that their income is growing by 15 to 16% per year, but their expenditure on these things are growing by 60 to 80%. Now, that's a very big gap that needs to be looked into. And of course, some of the official spending numbers are not out yet. There are a lot of agreements that have been signed, so we don't know how big this gap is actually. Now, my honest opinion about this would be that can we expect a bubble burst? I don't see it, the bubble popping overnight. What I can see, over the time or eventually is that this price increases by 40 to 50% or huge profit increases, they will start cooling down, like from this red hot prices to probably hot. And then so that is something that we can expect. Why? Because there'll be more other competing companies coming up, new companies coming up who will be producing more chips, different kind of chips. So that will automatically increase the competition, and at the same time that will lead to prices cooling down. Now comes to the most favorite part of this question, and I'm so glad Nikunj asked this, that what happens to Taiwan and South Korea if the slowdown continues or if the slowdown comes, say for instance. Now, in South Korea, it's important to understand Samsung and SK Hynix together make up for close to half of the Korea's main stock market index. Even in Taiwan, just one company, TSMC, it makes up over 40% of Taiwan's main stock index, and chips kind of make up for 40% of South Korea's exports. Now, and this 40% has been an increase from in 2023, that number or that percentage was 20%, right? Now, there is a very interesting name that we have in economics for it, which is called the concentration risk. Now, why is this my favorite part of this particular question? Is because earlier we have extensively spoken about this, and I have written about this as well in my economics columns about the Herfindahl-Hirschman index, the index that focuses heavily on export concentration. Now, what happens is when a country majorly focuses or invests or grows in one particular industry or one particular sector, and if anything God forbids happens to that sector tomorrow, it doesn't just affect the sector, it affects the whole economy, it affects the government, it affects the revenue, it affects profits, it affects small businesses, agricultural sector, every single facet of that particular economy. That is a risky bit, I would say. Now, there's a very interesting real world example for it, which the economists term as the Nokia risk. Now, that had happened in the early 2000s. So, Finland's basically, this comes from Finland's experience with this phone maker Nokia. So, at its peak, Nokia kind of occupied a huge part of Finland's exports. Now, the minute it started getting replaced by iPhones in general, the Finland's economic growth stagnated, firstly dropped, and then stagnated for almost an entire decade. Now, that wasn't because Finland's economy was not doing really well, but it was because a huge section of its country's GDP even was dependent on Nokia's manufacturing, phones, everything for that matter, and that kind of hit the economy really bad. Then coming to, of course, then Taiwan and South Korea. definitely when prices cool down, there will be a hit, because they are heavily dependent on their GDP, or the amount of expenditure that they are doing in this particular chip making sort of business, and exporting them as well. Even as I earlier mentioned about, I don't see a bubble burst
Yeah.
overnight, but at the same time I do expect the prices to cool down. Even if it cools down from, let's say, 40 to 50% or 80% for that matter, 70 to 80% to 20 to 30%, that will also be a huge hit for these countries. So yeah, that would be my response.
Now, Bidisha, Anubhav is asking, which two sectors need the most and complete overhauling as per you to make it more competitive, investment friendly, and business friendly within India? Now, Anubhav has another question, a little unrelated, saying, how is the balance of payment situation of India currently since rupee has depreciated so much?
Two very important questions, and although a little disconnected, I'll try and connect them in some way or the other. So first, the two sectors that you asked that need the most fixing. Now, if you're asking for me to name a specific sector, let's say textiles or steel for that matter, I would not go down that road. I would instead pick two things that lie underneath, or that's the fulcrum for every single sector, which is land and court cases, especially settling business dispute cases. Right? So here, let's start with land. Now, on paper, India has done a phenomenal job so far. It has made real progress. I'll state the data here. About 98.5% of rural land records are now digital, thanks to this government initiative and government program called the DIL RMP. But somehow putting presumptive, or I won't use the word flawed, but presumptive records does not really fix a flaw. It highlights the flaw even further. So why I am saying that? Because India still uses what's called a presumptive system for land ownership. Now, this means that your ownership on paper is the only proof that a sale has happened. Government does not guarantee the ownership. However, if we compare this to a conclusive system where government guarantees the land ownership, that is, tomorrow if that turns out to be falsified, or if that does not hold, then government pays you back the money, certain amount of money. So that guarantee of the government for land ownership is not there yet, even in terms of records. Now, this conclusive system that I spoke about is a very interesting system, which is also called the Torrens system, which was first used in South Australia in 1858. Now, Niti Aayog in an October 2020 around, they had proposed a law around this, but somehow implementation was an issue around this particular area. And because of this weak system, this presumptive system that we have, land and property disputes, I'll quote a data again, land and property disputes make up somewhere between 60 and 66% of all civil court cases. So if a business wants to buy a land or a factory, they are not just dealing with, paperwork, but they don't even know who owns the land actually in the first place. Now, this situation leads to our next pick, which is court cases, and to be specific, handling business disputes. As of this June, India has more than 56 million cases still waiting to be heard across all courts. Still waiting to be heard. I'll repeat this now. And in a global ranking called the World Justice Project's Rule of Law Index in 2025, the India Civil Court specifically ranked 114 out of 143 countries. Now, that is a sorry state to be in my opinion. Why I'm saying? Because tomorrow, if let's say a foreign investor comes into the picture and they would like to invest in a particular sort of factory or a particular business for that matter, and that contract for some reason gets broken, then they are looking at a case dispute or to be solved in not even a year or two, probably 10 years or even more than 10 years. Now comes an important connection. These two particular problems aren't separate, because land issues or land disputes take up the single biggest chunk of all these court cases and land disputes. So if India kind of fixed the land ownership issue, it could actually fix to a great extent the judicial issue as well, or the court case or dispute cases as well. Now, coming to the second part of the question, that how worried should we be about the rupee and the balance of payments? Now, firstly, short answer, India has genuinely had a tough year. The rupee has had a genuinely tough year so far. The rupee had started, 89 to a dollar in the year 2026, but by mid-May, it had reached up to 96.9 rupees to a dollar. And so here, the thing is that, of course, there has been a roughly huge amount of drop and huge depreciation. However, after that, the rupee has been recovering, but it's still in a depreciated form as much as we don't want it to be. So it is still being, given the number or given the range, it is still falling under the range of the worst performing currency in Asia this year so far. But however, of course, there are multiple reasons for the rupee depreciation this time. The primary reason was the Strait of Hormuz crisis, the oil crisis that increased the import bill, and huge amount of increase in the import bill overnight, which kind of resulted in huge amount of trade deficit, trade gap. The full year's goods trade gap jumped to $337 billion, up from 287 billion the year before.
Right.
Now, on top of that, March single-handedly witnessed the largest amount of outflow. Foreign investors pulled out a huge amount of money. So, huge capital outflow also took place around the same time. To be specific, the foreign portfolio outflows that happened predominantly, which is the hot and the patient money that we talk about. I'll get to the foreign direct investment bit as well. So now it's worthy to also mention here that between the January to March period, the current account, which is kind of the heart of the balance of payments, there's also capital account, but current account is really the one that moves the needle for that matter. Current account had actually witnessed a surplus, between the January to March period. Now, there were reasons for it, primarily one being that IT services, specifically in services sector, IT services and also business services did really well, and there was a huge amount of money that came through that. And the other was Indians who were working abroad, they sent a huge amount of money. So because of services and Indians who are living abroad sending money to the country, the current account experienced a surplus. But overall, the current account deficit for the year was around 0.6% of GDP. Now, that's genuinely mild, nothing to worry about. As long as current account deficit does not cross 2% of GDP, we are safe. Now, on reserves, India's foreign reserves stood at approximately $667 billion in the month of June, which was down from $728 billion by the end of February. We all know the RBI was selling its foreign exchange reserves. To be specific, the foreign currency asset section. You can look up our previous episodes to understand what all exactly goes into RBI's forex reserves, and specifically the foreign currency assets. The RBI was selling to slow down the fall of the rupee. But it's still recovering now. But even at $667 billion for that matter, we are in a much better space than probably a 1991 kind of a balance of payments crisis that we had experienced, or a 1997 crisis that Asia had experienced. In general, back then we barely had money to pay for the basic imports as well. But now, even with this amount of reserves, we have one of the biggest reserves in the world. However, there is an honest weak spot that I would like to talk about here, which is the foreign direct investment. Now, foreign direct investment is the long-term investment from abroad that goes into these long-term infrastructure investments, or long-term planning of the government as well. Only $6.9 billion for the whole year. So this was quite weak. And this actually connects right to the first part of the question on land ownership and court delays. Because if this is uncertain, no foreign investor would be looking forward for long-term investment in India. So that needs to be simplified in order to enhance or increase the FDI for that matter.
Yeah. Now, Bidisha, Ranjit Pal is asking, how can dearness allowance of government official in different states could be the same when cost of living, for example, Tripura or Sikkim, is more than for say Odisha or Chhattisgarh?
So, of course, before I explain how the dearness allowance is calculated for that matter, it's important to understand two facets of this price and inflation and price increase for that matter. Now, there are two completely different questions that you can ask for any place that you live in. One is how expensive is it to live there,
Right.
which talks about the price level. The second question you can ask is how fast are the prices increasing, at what rate compared to the previous year in that particular area. That is the inflation rate. It's very important to understand the difference between the two. Now here, let me give you a simple example. Let me try to break this down. Say for instance, there's a company that has a branch in Mumbai and a branch in a small town. And one employee works in Mumbai and the other employee works in the small town. Of course, the prices of the commodities that somebody purchases in Mumbai is much higher compared to that small town. However, both receive a 5% raise in the same year, and that is because the operational costs of the company might have increased by 5% for that matter. But where Mumbai has started, probably that 5% increase would do nothing for that particular employee,
Right.
because commodities are already very expensive in Mumbai, or parts of Mumbai. That is something that has not been addressed. So what is originally, historically what the price situation has been like is not something that the dearness allowance in the first place was meant to address.
Right.
So dearness allowance, that 5% raise from what your current situation is what the dearness allowance was meant to address in the first place. Now let's look at the actual mechanics. How is the dearness allowance calculated? So the government basically tracks a particular single number, which is called the All India Consumer Price Index for industrial workers. Now this is one national average of how fast prices are rising throughout the country. And this is recorded in January, this is recorded in July, twice a year, and that number gets translated into a percentage of the basic pay, which is the DA that every central government employee, no matter where they are located, receives. Now here's actually something very interesting, and we all get confused here. You'd expect Sikkim and Tripura, because it's more remote, more harder to supply for that matter, to show faster rising prices compared to say a Odisha or a Chhattisgarh that was mentioned in the question. But recent state level data say otherwise. So Sikkim has had one of the lowest inflation rates lately. In the entire country, which is under 4%. Tripura has also been relatively moderate. Chhattisgarh, in fact, has experienced around a 9% rate of inflation, and Odisha around 7 to 7.5% for that matter. Now, this distinction that we just built, remember that Sikkim on a day-to-day basis can be expensive because you have to use multiple vehicles to reach to a particular point in Sikkim because it's more remote. But the increase in prices, the inflation rate is much lower compared to a sort of a Chhattisgarh or an Odisha for that matter, which might raise the obvious next question that one may ask, that if DA is not the tool to be able to measure regional cost differences, then what is? There is a measure for it, which is the house rent allowance or the HRA. Okay. So what the government basically does here, the government sorts cities into three tiers. There is three tiers, X, Y and Z, and X is for the biggest, Y is for the mid-tier cities, and then Z is for the smaller cities for that matter. Now specifically the percentage that goes is like 30% say of basic pay in X cities, 20% in Y cities and 10% in Z cities. Now here's where the real problem shows up. This entire sorting of X, Y, Z cities, I find this more of a design flaw, because this sorting is done on the basis of one parameter that I believe gives an incomplete picture when it comes to measuring regional cost differences for that matter, which is population count. Okay. Now nobody actually goes out and prices a basket of groceries, and that produces a genuinely strange outcome, in my opinion. I'll give you an example. Say for instance, Raipur in Chhattisgarh or probably Bhubaneswar in Odisha. Now, they have relatively much higher population, right? And hence, they fall in the Y category. Okay. But then if we look at Gangtok, say for instance, that is also a capital city, but the population relatively is much lower, so they might fall under the Z category.
Okay.
So that percentage of HRA might be different from
Different.
one another. So that, in my opinion, does not really completely capture the regional cost differences. So does India have a real factor or real parameter to measure regional cost differences? I don't think so. HRA and DA kind of work out as probably two proxies, giving kind of from a price level or a cost perspective, or probably to an extent from the population demographic perspective. However, it would be great, of course, we're talking economics, so we have to compare it with another country. United States has something very interesting, where the Bureau of Economic Analysis publishes something called the regional price parities every single year, where it's an actual index that measures the price of a basket of commodities in every single state in the United States of America, which kind of gives a much clearer picture. So now you would ask, why hasn't India been able to build something like this? There are two reasons for it. The first one is a practical one, the second one is a political one. The practical one being that collecting data across districts from household to household, on a real-time basis is not only difficult with this amount of population, but at the same time is a little expensive as well. Political reason for it would be that there are these state level unions and state employees who ask for parity as a DA percentage or an HRA for that matter, with or DA percentage to be specific, of being the same with the DA percentage of central government employees. So the state believes in emulating the same as the central government. In this particular case, this is more political. So here that would be a genuinely cost formula or something that, or a parameter that measures this. You are absolutely right. It does not exist, but these are the two proxies that I can think of.
Okay. Bidisha, the last question for this episode is by Narendra Arya. He's saying that in 2016, the Indian government suddenly announced demonetization. This was done with secrecy. This step of the government was ridiculed by many political parties, but nobody can deny that fake currency was in circulation at that time. The question is how fake currency affects the country's economy. What is the impact on the common public? What is the level of fake currency in today's money circulation? And could demonetization control the fake currency in circulation?
Very interesting question. So now let's take it in the first part, that how does fake currency hurt the economy? Now think of it in a certain way, that let's talk about the first part, which is money. Now when the government prints a note and the value of the note, there's a difference in the cost. When it prints the note, the cost of printing that note is definitely lesser than the value of that note, right? And that gap is the profit that the government earns, right? And that profit has a name, it's called seigniorage.
Okay.
Right? Now what happens is, when fake notes are in circulation, they are trying to capture that same profit, and the pain is inflicted the most on the poorer individuals in this economy, because, or the rural households, or the rural sector for that matter, or even the informal sector. We have a huge informal sector, although it has narrowed down, but we still have a large informal sector, because most of the transactions there happen in cash. So for instance, if you get a fake note from somewhere and a bank or a shop identifies it, nothing can be done about it.
Right.
So you face a much bigger loss than even government does for that matter. Now that's exactly the kind of area that the government tried to look at and also hinder this flow of fake notes. Now the second part is not about money at all. I'll get to the data a little later. The second part is more about security. So the National Investigating Agency has found actual links between fake currency gangs and smuggling, and also to an extent to terrorism funding. So now that's actually, fake notes in circulation that is way more worrying than in the cash flow for that matter. Now second, how big is this problem really? That's where data comes into the picture. Now back in 2016, here's a number that will surprise you. Back in 2016, a government's own study that was done by the Indian Statistical Institute in Kolkata under the guidance of the National Investigating Agency. They found that the total value of fake currency in India at any time was about 400 crore rupees, and this number has stayed the same for 4 years in a row. At that time, the total value of currency in India was about 18 lakh crore rupees. So the fake currency was about 0.02% of the total currency that was out there. That's a tiny amount. Definitely that tiny amount also makes a huge difference in the economy and has to be sort of, immediately kind of hindered or mitigated in some way or the other. Now, what about today? Now, RBI's newest report, annual report up till the March 2026, covering the year up to March 2026, shows that banks caught 2,29,746 fake notes in 1 year.
Okay.
And that's like 5.7% up from the previous year. And I'll state the data for this fake 500 note, that it makes up over 41% of all notes and more than 86% of the total value of cash in the country.
Okay.
And fake 500 notes have actually increased. It has jumped 20.5% in just 1 year. So on the other hand, fake 2000 rupee notes have almost disappeared because RBI kind of moved it, took it back from circulation. So that was something that could be, let's say, I mean, the fake notes kind of did not get printed even further. When it comes to the 200 rupee notes, since its launch in 2017, the number of fake notes, fake 200 rupee notes has also increased. Now comes the most important part of the question, that did demonetization actually stop fake currency? Now, here's my honest answer. Did demonetization stop fake currency or not? It will completely depend on which data you choose to look at. Okay, and I'll give you both the datas. So if you look at one kind of data, it looks like a success. If you look at another kind, it looks a little less clear. Let's look at the good data first. Okay, the bank data. So the number of fake notes that were caught by banks compared to how many real notes are in circulation has actually gone down.
Okay.
In 2016, it was about 7 fake notes for every 1 million. Now it's about 2 fake notes for every 1 million. So we can infer that the new note designs have definitely helped in curbing the amount of fake notes that are being circulated in the economy. Now let's look at the police data. The National Crime Records Bureau. Now, this tells a very different story. The total amount of fake currency seized by police more than actually doubled over roughly the same years.
Okay.
Even though the number of actual cases filed have dropped, but this has doubled, but each incident involves a much bigger haul of fake notes. So the quantity or the amount of fake notes have increased. So here, what I would like to infer from this is that this kind of crime has gotten much bigger and more organized but less frequent.
Yeah.
Right. So here, I would like to specifically say that definitely, 2016 was a measure to curb the circulation of, fake rupee notes, be it 1000 rupees for that matter, in any other 100 rupee notes for that matter. But specifically, has it completely stopped generating fake notes? Not at all. This will keep happening. This circulation will keep happening, and it's kind of a long-term battle. That the government, the RBI, the central bank will keep kind of interfering into the picture, and they will move. Probably take away certain amount of notes out of the circulation, right. And the others, it would be easier for them to regulate, perhaps. So
yeah. Bidisha, that brings us to the end of our episode today. I would say that our viewers have sent us such detailed and very pointed questions this time, but they were all about different topics, so we could go multiple directions, and it made the conversation very interesting for us as well. Thank you so much. Keep sending us your questions. We'll see you again next week with another episode of Bidishanomics.